Good morning, happy weekend, happy holidays. The holidays are, 'tis the season. The holidays are here, right around the corner, and I am super excited. I really enjoy doing these long forms because these long forms allow me to cover macro, Bitcoin, shitcoins, technical analysis, fundamental analysis, currency, commodities, rates, Fed in under 10 minutes to keep all of you at strict attention. And let's get right into it. Bitcoin here, I said in previous videos that I do expect the weekly to retest the 50 RSI. As you see that red arrow on the RSI, I do expect it to come up there. Now, it didn't come up there, but it did hit my first level of 93K, 94K. It did hit that. Now, I said I expected, I didn't expect, but I could see it hitting 106K, okay, as a retest of the top level of the Gaussian Channel. If it comes out of the Gaussian Channel, I flip really bullish really fast. I'm a trader. I don't care if the market goes up, down, sideways, or in circles. I want to profit from it. Let's go quickly now to shitcoins. Everybody loves shitcoins, don't they? If you're holding, you don't, but let's see what's going on. Not bad, but not great. You know, it was wicking below this little shoulder, head, shoulder trend line here, but now it's back above, which is, it's okay. I mean, if it stays above there, it's okay. If it goes down below, if Bitcoin nukes and you would expect shitcoins to follow, not good. You know, if it goes below that line, I would sell your shitcoins and salvage any money you can get from them because they are not guaranteed to go down 70% like Bitcoin. They can go down 99.9%. And then from there, go down 99.9 more percent. So it's just a word of caution there. But Bitcoin and shitcoins are doing exactly what I had thought they were going to do. Retest levels, slow and steady. The trend is your friend, and the trend is in the Gaussian Channel. What I'm going to cover this week is I'm going to cover a China stock. I spent 10 years in China macro, China finance. So there's a stock here I like, GDS Holdings. I'm going to look at it from a technical point of view right now, and I'm going to look at it from a fundamental point of view. From technical perspectives, looks great. I mean, we're kind of making this higher low and flattened out top ascending triangle. So what you could expect here is maybe some upwards movement to the top of the triangle at $42 and then some consolidation back down to 35. So would I buy here? Sure, I would be indifferent to buying here. I would put some money at it. I wouldn't go all in, but this is your range. If it breaks down in the range, you want to sell. If it breaks up, double down. But technically speaking, I like it. Make some squiggly lines here. And, you know, if it breaks that, we are all systems go for a GDS breakout. And what GDS is it's a play on China commodities, China rare earth, China independent AI data center operator. So this is a play on technology. And it's 6.3 billion market cap. Well, let's just go over the fundamentals here. 6.7 billion market cap, and we'll stretch it out to a 6-month. As you can see, these kind of charts I love because this shows consolidation. If you go to yearly, it probably shows a little bit of a more consolidation, top, bottom. This is where you want to be buying, ladies and gentlemen. So it's a China play. And what I can say about China is that the China stocks don't have a correlation to the Western stocks. Western markets could nosedive 80% and Chinese stocks can keep going up. Western stocks can be up 100% and Chinese stocks could, pull back 50, 70%. It all depends on China policy, and China seems like they're all in for AI. Not only are they all in for AI, lithium, rare earth, they are the number one rare earth processor on the planet, and it's not even close. 80 to 90% of rare earth processing goes through China. Let me explain. Rare earth is in America, it's in Australia, it's in South America, it's everywhere. It's not rare, okay? But China was one of the only countries that said, we are going to invest in the infrastructure of processing this rare earth. And that is what they do. That is their strength. That is their competitive advantage. That is why I like their rare earth stocks. And GDS Holdings, to me, is a buy, ladies and gentlemen. So I wanted to say that about GDS. And then I will go over to another stock that I covered on the shorts this week, TE Connectivity, something that looks really, really good to me from a technical and a fundamental perspective. I'm on the weekly here. And as you can see, TE Connectivity they're a huge correlation to NVIDIA, but they weren't moving with NVIDIA. they connect the AI, the data. You cannot have an NVIDIA chip alone. You have to have a connector, and TE connectivity has an oligopoly/monopoly on this process. So it's like NVIDIA of the inside, okay? And the market just, as you see, the market kind of faked everybody out here, and then it just started moving right after those tariffs, right after that tariff nuke. It kind of faked out. And, from there, on the year, it's up 74%. But yeah, so from the breakout, it's up 74%, which is a lot less than most AI stocks, right? Most AI stocks are up 150, 250, 300%. You don't want to be chasing 300%. You want the ones that are up 50, 70% and are going to play catch up. The market is going to rotate into them. So those are what you want. And then a lot of analysts look at technicals on YouTube. I go beyond that. I love to look at the fundamental because the fundamental tells why things move. Technicals just show, oh, okay, well, it can pull back to the 236 fib level, and that's a buy, or the 382 or the 0.50. Those are buy levels, right? But fundamental tells you why things go up. And here's a story in here. So the EPS, the earnings, they have great earnings. Trailing 12 months are $6 per share, earnings per share, and a nice juicy PE ratio of 40. Why do I say nice and juicy? Because on an AI development play, on a tech development play, these can get up to 80 to 400. Palantir is 500 PE, way overpriced. I wouldn't be buying Palantir, okay? I'm actually short Palantir. Just a little bit of money, not much. And the beta is one. So a beta tells you the systematic risk or high risk. If a beta is near 1, market risk. So this is 1.25. It's not so risky. It's risky according to its AI market, okay? So these are things that you want to know when you want to invest in something. And analysts have it going up by another 20% by 1 year target estimate. I think they'll start adjusting those estimates after Q1 earnings when it just blasts Q1 earnings on the back of NVIDIA. So I would say 350. I think these are a little bit lame, a little bit lagged. And yeah, this is something that has a really great chart here. I like the chart. I like how it pulled back. It's first run and then it's pullback, right? So you could expect continuation because the trend is our friend, right? So we have China. We have TE connectivity, which is global monopoly-like. Everybody can enter the market, but TE connectivity has a strangle on that particular connective market. And then I really like ETFs. My favorite is REMX, which is rare earth and now lithium. Lithium's a huge push. They should rename it rare earth ETF to lithium ETF, LIMX, lithium ETF. But I'm also looking at this thing for data centers. Data centers is TE connectivity. If you don't want to buy the stock, if you want to get a diversified basket, maybe you want to put 1% of your portfolio to the stock, right? 1% of your portfolio to GDS. And then maybe put 5% of your portfolio to the ETF. Why? Well, you're going to see the ETF is much, much more diversified. Let me attack technicals first. The technicals look fantastic, by the way. It's only been around since 2020. Had a nice cup here, nice base here. So this is the base. And it's only about 100% above the base. And it has a diversified basket of Equinix. I have that in my portfolio here. I haven't gone over it yet. It has Applied Digital, which I did do in the short version this week. And it has GDS holdings. So again, if you don't want to buy GDS, you want to buy the ETF, you get much more exposure to data center assets, which are very, very exciting to me into the next 1, 2, 5, and 10 years of AI build out, okay? The last thing I wanted to talk about is this macro. We're going to give you guys a little bit of macro today. As you'll see on Twitter or CNBC, the crowd is talking about QE, quantitative easing, the Fed pumping money into the markets. How do they do that? They buy bonds. So they buy the bond, and the bond is put on their balance sheet, and the money that they buy it from is printed, and it gets put into banking circulation, okay? So the Fed is saying we are wrapping up with our interest rate cuts, which people think are good things. They're okay. Interest rate cuts, I think the interest rate should be at like 2%. I don't think it should be that high. However, if the Fed is planning on doing QE via bond purchases, they're going to be a little hesitant to lowering rates. Why? Because that's inflationary. That's too inflationary levers they're pulling here. One is to lower rates, inflationary. The other is to add money into the market via buying bonds and putting the bonds on their balance sheet, okay? So I think it's really important to understand why they're doing that. They're doing that because Japan is breaking the market, as this article will see. If you want to read this article yourself, I'll link it in the description. Japan is increasing rates at the fastest clip in 40 years. Some say that their bond market is breaking, and it shows in the interest rates. The unwinding of the yen. So what's happening is Japan's interest rates are going up, which means their interest expense is going up, which means they have to pay more money that they don't have in liquid form. So what they do have is they have US dollar denominated bonds, which they purchased 20 years ago, 10 years ago, 2 years ago, etc. They're selling those bonds. The Fed is buying bonds. You see what I'm getting at here? They are selling bonds. That drives the bond price down and the yield up. No good. No good for America. So the Fed must counter that. Japan just sold $120 billion in bonds, and the Fed bought $40 billion in bonds. So what's the net? The net is still tightening. Let me say that again. The net is still tightening. Even though the Fed is quantitative easing, per se, the net effect is still tightening, and that's why you're not seeing markets rally. That's the why that the technical analysis will not tell you, okay? So how is this going to end? I don't know, but I just wanted to communicate that that is the issue here. That is the serious issue. Why are your shitcoins not going up? The liquidity is a net negative, not a net positive, ladies and gentlemen. The volatility, the uncertainty, there is $7.2 trillion in money market funds, the highest since 2007. You think that's a coincidence? I do not. That's not retail money. That's institutional. That's Warren Buffett. That's hedge fund money that are saying, we will sit and wait right here and we will buy the blood. And we will be okay if the market continues to rally. Why? Because the market's in an 18-year bull market and we know that the market is cyclical. That's their thought process. So if you like this analysis, if it was not too long for you and you stayed till the end, please give me a comment on what stocks you want me to cover. I know I'm going to cover CoreWeave next time. There was a request to cover that and a couple other ones. So I wanted to get to these first, and then I'm going to cover some more high-flying tech stocks in my next long-form video, which will come in approximately 3 to 4 days. Thank you very much for being with me, and I will see you in the next video.